Good afternoon and welcome to the Asian Midday Market Watch. Our guest today is Kelvin Wong, market strategist at CMC Markets. Kelvin, it's always great to have you on the show.
Hey, my pleasure, Brian. Good to see you again.
Now, Kelvin, let's take a look at crypto markets first, then take a look at regional markets, and then we'll get some of your insights. We'll start with Bitcoin, which is at 32,628.8. It's down 4%. Ethereum is at 1,909. It's down 5.4%. Going across the regional markets, the Nikkei is at 28,854.48. It's down 0.07%. The Shanghai Composite is at 3,561.01. It's down 0.15%. The Hang Seng is at 28,838.96. It's up 0.08%. The ASX 200 is at 7,283.9. It's down 0.2%. Rounding off the numbers, we've got the Kospi, which is at 3,288.28. It's up 0.37%. Kelvin, it's a very mixed market out there. Tell us why.
Okay, to me, I would say it's rather steady. I would say as long, but it did not actually kind of a shape and a kind of a negative feedback loop. So after yesterday's hawkish comments from two key Fed officials, which is Kelvin and Bostic, so what they actually mentioned yesterday is that they are actually in favor of actually bringing ahead of tapering. That means, i.e., talking about withdrawing the kind of a excessive liquidity in the financial markets given last year pandemic crisis to weigh it against the negative adverse effect of heightened inflationary pressures that is coming into the US economy as well as the global economy that we have started to see in several key economic data, overlaid economic data, as well as the prices of global commodities in the first half of this year. So far, right, we have started to see three kind of a more relatively hawkish view on three Fed officials, including last Friday bullet. Okay. But what's positive over here is that after this three hawkish comments from these three Fed officials, their big boss, which is Fed Powell, in his latest federal kind of a congressional testimony, which is on Tuesday, which is Wednesday, early morning Asia session, he actually reiterated that he believed that the current inflationary pressure is more temporary rather than a sticky one. So that could actually add a bit of comfort to the global stock market. So that's why we start to see a bit of mixed section in the Asia stock market today rather than a kind of drastic fall in the Asia stock market at the start of this week, which is Monday.
Now, one of the things that is a key event this week, Kelvin, is the Bank of England policy meeting later. Now, the Bank of England is expected to acknowledge that, okay, there are inflationary pressures. There is data that supports that. But according to ANZ economists, they don't expect the statement to push back against expectations that interest rates to start to move anytime in the second half of the year. Now, what's your view on this?
Okay, to me, I still reckon that it's kind of a 50-50 take right now because if you look at the current situation in UK, you talk about the COVID-19 infection, the new spread of the Delta variant, and now there's some signs of Delta Plus variant in UK as well. So I do not believe that the Bank of England will be so aggressive to actually start sounding hawkish at this point in time. And nevertheless, I want to highlight is the last meeting in May. So they actually kind of stated that they actually kind of reduced the weekly bond purchase. So they have a weekly bond purchase thingy. So they reduced it from 4.4 billion pounds from 3.4 billion pounds between from the month of May to August, starting in the month of May of August. So that actually kind of it could be a bit of forward guardian signal that they are about to temper its bonds purchase, which is around the corner. But however, after that, Bank of England Governor Bentley came out and said that, hey, this weekly reduction in bond purchase was more like an operational decision rather than to indicate a change of stance in the monetary policy. So what's interesting for this meeting is before this meeting, there was actually a key economic data out in UK, which is the inflationary data, which is one of the key metrics that Bank of England watched to actually determine their monetary policy stance, is the CPI. The CPI for May actually shoot up to 2.1% year on year in May, which is slightly above the annual 2% target set by BOE. So very interestingly, right, for this time around, market participants are trying to watch the tonality of its communication later. which is one of the key aspect of thing. Yeah, the markets where we're going to play a close watch too.
Now, where do you expect then the pound to head?
Okay, so to me, from a very interesting point of view, is that if you look at the drastic fall in the pound, which is was seen also across the major pair, right after the Fed FOMC outcome, which is on last Wednesday, so it actually fell close to about 340 pips. So what's interesting is that the fall in the pound, that means the pound versus the dollar, has started to stabilize at the start of this week. And what's interesting is start to stabilize at a key medium-term technical support zone, which is that 1.3810/1.3670, which is also very close to the 200-day moving average, which is a critical technical indicator that most traders watch to gauge the longer-term trend of any particular instrument. So far, right, since the start of this week, it has bounced close to about 160 pips ahead of BOA meeting later. So what I could see over here is that if this particular movement of the pound continues, to break above this intermediate resistance to watch will be late. Intermediate resistance to watch ahead of BOA will be at 1.4085. It managed to have a kind of daily close above 1.4085, means 1.4085. It could actually translate to a potential multi-week impulsive up move from here.
Now, moving on to oil prices, which are literally hovering at 2-year highs. Now, particularly after an industry report on US crude inventories reinforced views that the market is actually tightening, partially due to, of course, travel picking up in Europe and North America as markets open up. What's your short-term outlook on crude oil prices?
Yes, definitely. So we're talking about this drawdown in this weekly change of this EIA crude oil inventory data, which is out almost every week in US. So what we could see is that yesterday's fall, which is negative 7.61 million barrels, is actually more than consensus of 3.94 million barrels. So that actually indicate close to about, I would say that 1, 2, 3, 4, yeah, it's a 5th week of consecutive decline, and the decline has started to get more pronounced. All right. So what it means that there's actually a demand of crude oil in US. So, but with we call it with a lack of supply. So with that coming into picture, as well as the US shale gas producer that's being less reluctant to add into their production, what we could see that it could be potentially supporting WTI crude oil futures, at least in the short term. So I'm looking at, as long as this key short-term support holds, which is at 69.80 for the WTI crude oil futures, which coincide with its rising 20-day moving average, it could potentially move higher from here towards the next resistance level, which is the short-term one at 75/80 zone.
Now, Kelvin, thank you very much for your insights.
Thank you, Brian. My pleasure.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations. Please like and subscribe to our LinkedIn and Facebook pages. Thanks for tuning in.